Assalamu alaikum to part 2 of IAS 37. So we are going to cover questions here. The first question is whether it's an adjusting event or a non-adjusting event. Okay, because all of this have occurred after the reporting period, all the 4 transactions, but before the date of approval of the financial statements. Okay, the first one, insolvency of a major credit customer. What do you think? What is it? The insolvency of a major credit customer. Second, the uninsured loss of inventory in a fire. The proposal of a final equity dividend and a change in foreign exchange rate. Which of this is adjusting and which of this are not adjusting? Okay, so let us go to the answer. The first one. So if you see, rest three are non-adjusting except the first one. First one is adjusting. The insolvency of a major credit customer. Why is this adjusting event? Because he's a major credit customer, right? Because he's a major credit customer, that means this has occurred something from the past, right? A past event has occurred. That's why he's a major credit customer, and now he went insolvent, right? So that's why you need to adjust this type of event. That is called adjusting event. The rest three, second, uninsured loss of inventory in a fire, right? You don't know, you cannot predict that fire will occur or not. There have been no past event to say that you can predict that fire is going to occur or not. So you don't adjust it. It's non-adjusting, but you need to disclose it. Third, the proposal of a final equity dividend. This is also something which is not didn't happen from the past event, and you don't have any obligation for it. You understanding? So this is also non-adjusting. A change in foreign exchange rates, right? Foreign exchange rate is something not in your control. It can change, right? So you don't have an obligation, and also it didn't occur because of the past event. So this is also non-adjusting. Now let us go to the second one. This is about the warranty provision, whether you have to calculate it. So here they didn't ask whether it will be recognized or not. Okay, this question, it will be recognized and you need to calculate how much it is. Clean sales domestic appliances such as washing machines. Okay, so washing machine is the item. On 31st December 2001, Clean decides to start selling washing machines with a warranty. Under the terms of the warranty, Clean will repair washing machines at no charge to the customer if they break within the warranty period. So what are they going to do? They will repair the washing machine, but they will not take any charge from the customer if within the warranty period the customer breaks it. So the entity estimates based on what? Past correspondence with the customer. That means this is a constructive obligation. Okay, based on past correspondence with customer, the 20% of the washing machine sold will require repair within the warranty period, and at an average cost 50 per machine. Clean sold 200 washing machines on 31st December 2001. The time and the money should be ignored. So how much is the warranty provision? 20% of the washing machine sold will require repair within the warranty period. Okay, so it is for that 20%. Yes, a provision is required. Number one. Number two, a past event. What was the past event? It was the sale. Remember, you need to go into the conditions of the criteria that why you have recognized it as a provision. Okay, so because there was a past event, what was the past event? You have sold it. The sale is the past event. Because of this, this has created a legal obligation to spend money on repairing machines in the future. So the best estimate can be determined using an expected value. What is the expected value? How many machines you have sold? 200. Out of that, 20% only you will provide provisions. Provisions with for warranty. Into 50 because the cost for each machine is 50. So this is the amount of provision, right? This should be something very easy. But definitely in the exam, you will not be asked directly like this. The questions will be more complex. The scenario will be more complicated there to identify. But this is, since this is in your chapter, this is just for your understanding. Okay? So that's why they have kept this easy, this simple. So don't take this as your main exam. In the main exam, you will not be asked like this. 3. Danboy, a company that owns several shops as a year end of 31st December 2001. Okay, one of the shop is loss making. At 31st December 2001, Danboy forecast that this shop will make a loss of 50,000 in the year end to 31st December 2002. As of 31st December 2001, one of the shop's building require repair. The cost has been estimated at the reporting date. At the reporting date, so at 10,000, the repair is made in the following accounting period at the cost of 12,000. You see, they have estimated that this will be the cost at the reporting date. But what actually happened? The repair didn't happen that time. The repair happened the following year. That means 31st December 2002 at a cost of 12,000. So now discuss the accounting treatment of the above in the financial statements. So how are you going to recognize? Do you recognize, first of all, whenever provision is given, first understand what type of provision. Is it specific, for example, restructuring, operating losses, contingent and contingent liability, what is it? Then you need to say whether you will, whether it will be recognized or not. If it is recognized, how it will be measured. So IAS 37 states that no provision should be made for future operating losses, clearly, right? You can see in part 1, I've discussed that for future operating losses, you don't provide provision. And the losses which they have been talking is future operating losses. So therefore, in this case, no provision should be made for the 50,000 forecast losses. Let us go up and see the losses. What was the losses? 50,000 in the year end 31st December 2002. So for that, you are not going to make any provision. No provision should be made for future repair, despite it being probable and capable of being reliably measured. Even if it's probable that you are going to meet future repairs, and also you can measure it reliably, still for future repairs you don't provide provision. So no provision. Okay, this is because there is no obligation at the year end. There is no obligation at the year end that in the future repairs and all you have to make. If it is needed, see, repair, okay, I understand that you have to do repair, right? You cannot go on without repair. So you might say we are obligation. No. Next year only you have to repair. There's no obligation as that. When it's not functioning or you feel like it needs repair, then you repair. But obligation is not there. That next year only you have to repair. And no obligation at the year end. At the year end you don't have any obligation. Later if you have obligation, that's another thing. But here in this, no obligation at the year end. What was the expenditure? The 12,000 is expense to profit and loss as it is incurred. The repair expenditure. This is not a provision. You expense it in profit and loss account. This 12,000. Because no provision. Right? Now let us go to the fourth one. Under new legislation, an entity is required to fit smoke filters to its factories by 31st December 2007. Okay, at the reporting date of 30th June 2007, the entity has not fitted. They have not fitted the smoke filter, but they were required to fit by the law. Should a provision be made at the reporting date for the estimated cost of fitting the filter? They didn't give you the cost, but your question is, should a provision be made at the reporting date? That means 31st December 2007, because they didn't fit the smoke filter. Reporting date was 30th June 2007, right? But by law, they were required to fit it by 31st December 2007. So should a provision be recognized? No provision should be made for this. You see? Why? For this future expenditure, despite it being probable and capable of being reliably measured, there has been no obligating past event, the fitting of the filter. You don't have any past event, obligating past event. So you don't have to recognize provision for it, the fitting of the filter. Okay, now let's go to the fifth. There are two things. This is about environmental provisions, okay? So for each of the situations, explain whether provision should be recognized or not. Okay. Now let us go deeply to this, because this type of questions you can expect in your exam. They will give you some case study. This 2-3 paragraphs they will give you, and from there you need to recognize whether provision will be should be recognized or not. Let us go through it. An entity has a policy of only carrying out work to rectify damage caused by the environment when it is required to do so by the local law. Okay, they have to rectify the damage only when it is required by the local law. So for several years, the entity has been operating an overseas oil rig, which causes environmental damage. for several years they have, and it was causing environmental damage. The country in which the oil rig is located uh, has not had legislation in place that required this damage to be rectified. Okay, so they didn't have to rectify because there was no law in the place for that. A new government has recently been elected in the country. At reporting date, it is virtually certain that legislation will be enacted that will require damage rectification. This legislation will have retrospective effect. Retrospective effect means you will go back and change in the past. That means whatever you haven't recognized, right? You need to now do it because retrospective effect. B will read later. Let us go to the answer of A. According to A, whether there should be recognition or not. So, okay. For each situation, ask two questions. Okay. So this you also have to follow when you are answering a provision question. Is there a present obligation as the result of the past event? Is there an outflow of economic benefits probable as a result? A provision should be recognized if the answer to both question is yes. Both has to be yes. Then a provision you recognize. Otherwise, no. In the absence of the information to the contrary, it is assumed that any future cost can be estimated reliably. If they don't give any information that it cannot be estimated reliably, we always assume the default position even in your exam, what is it, that future cost can be estimated reliably unless they say that it cannot be estimated reliably. We always assume it is like that. So now if we go by the present obligation, yes, we have a present obligation because of the law, new legislation, right? Because the new legislation with the retrospective effect is virtually certain to be enacted, you are very sure that this law is going to be enacted. So present obligation is there. The damage caused by the oil rig is the past event. You see, something must have happened in the past so that you become so that there's an obligation for the future. What was that? Damage. Damage caused by the oil rig is the past event, right? It happened. The damage that should happen because of the oil rig already happened, which gives rise to present obligation. Outflow of economic benefit probable? Yes. Conclusion, recognize the provision. Because when you rectify the damage, anyway you have to give in cash. So it's an outflow. So conclusion, recognize the provision. What about B? Under a license granted by the local government, an entity has constructed a rock crushing plant to process material mined from the surrounding area. Mining activities have already started. Under the terms of the license, entity must remove the rock. They must remove under the terms of the license. Okay, the rock crushing plant when mining activities have been completed and must landscape the mined area so as to create a national park. It looks like that provision is required. Let's see. Present obligation, same question like how we answered for A. Yes, because there is a legal obligation under the license, right? It's written in the license, so we have a legal obligation to remove the rocking crush plant and to make good damage caused by the mining activities to date, but not any that may be caused by these activities in the future. Because mining activities should be stopped and so no damage caused. Outflow, yes. Conclusion, recognize the provision for the best estimate of the eventual cost of rectifying the damage caused by the reporting date. Okay. Now let us go to the sixth. On 1st Jan 2006, scrubbers spent 5 million on erecting infrastructure and machinery near to an area of natural beauty. This assets will be used over the next 3 years. Scrubber is well known for its environmentally friendly behavior. You know, they are well known for environmentally friendly behavior and is therefore expected to restore the site after its use. The estimated cost of removing this asset and cleaning up the area on 1st of Jan 2009, that means after 3 years, is 3 million. The pre-tax discount is given 10%. Scrubber has a reporting date at 31st December. Why they have given you the pre-tax rate? For you to find the present value. Remember, after 3 years, they have given you the estimated cost of removing the asset, but you need to find the value today. So explain how above will be treated. Scrubber has a constructive obligation, right? To restore the area to its original condition as a result of past event. What was the past event? Because they have erected the infrastructure. So now they have a constructive obligation. Therefore, it should recognize a provision at 1st Jan 2006. The best estimate of the expenditure is 3 million. But this must be discounted to its present value. This is the present value in the third year. They have given you the discount, this thing, 10%. So 10% in the third year, 0.751. Now this is your value. Scrubber must not carry out its operation without incurring the cleaning up cost. You see, without incurring the cleanup cost, they cannot carry out its operation. They have to incur that cleanup cost. This means that incurring the cost gives it access to future economic benefits. You see, if they incur that cost, then only they will have economic benefit, because then they can carry out the operation. So the estimated cleanup costs are therefore included in the, because they are going to get benefit. You see, this is one of the definition of asset also. Future economic benefit comes to you. So that's why the cleanup cost will be taken in the cost of plant, property and equipment. That is an asset. So debit PPP by this amount only, and credit provision. Now, each year the discount unwinds and the provision increases. So discount unwinds, provision increases. You have to apply 10% discount on this provision. So your provision will increase because of that. The unwinding of the discount is charged to that fire 10% on the provision what you have charged. That is known as unwinding of discount. You write it in the statement of profit and loss as a finance cost. Now, just so if you see the movement on the provision, they have given for the 4 years. So opening balance is this on this 10%. You see, then they will get, so this closing becomes the opening, then 10%, then again you will get balance, again this becomes the opening, again 10%, same again. See, at the end you should get 3 million, and then you will not charge any 10%. Then fully 3000 will be gone and closing balance has to be 0. Now the initial cost is PPP is 5000, and cleanup cost is the amount of the provision 2253, the opening. So this is the total. Okay, first we'll see the 5 million. Okay, it is this 5 million. Okay, this they have spent on erecting infrastructure and machinery to maintain need of nature value. So this 5 million. You are taking here. That is the cash paid. Okay. Now, statement of profit or loss. Two things you have to go. One finance cost, one depreciation. Once you take it as an asset. So now this amount you take this as an asset and you need to divide this by 3, because fourth year no depreciation will be there. Fourth year it has to be 0. So that's why you need to divide by 3. 2006, 7 and 8. Same amount only. And unwinding cost, we have already taken 10%, so you know from this table this amount, and this year no value. Statement of financial position, that cost will go as a asset. So you write this is the same cost. Cost of the asset will be same. On that depreciation will be, depreciation is to increase. Okay, accumulating depreciation. For example, first year it is 2418, this one, but second year with this 2418 you add this 2418, so it becomes 4836. Again you add 2417, then it becomes 7253. So then you get the carrying amount. Now in the liability section, the cleanup provision. So first year it is 2478, then because of the finance cost it will increase. You have to keep on adding, and it finally becomes 3 million in the third year. Okay, this amount only you have to get for the provision, this one, the provision in the statement of financial position. Okay, now let us go to the 7th one. On 15th Jan 2005, Board of Directors of Shen voted to proceed with 2 reorganization schemes involving the closure of 2 factories. Hence, reporting date is 31st March. Other financial statements will be authorized for issue on 30th June. Scheme 1, Scheme 2. For each of the 2 schemes, discuss whether provision should be recognized. If so, at what amount? Closure cost will amount to 125,000. Closure will be announced in June, will commence in August. Scheme 2. The cost will amount to 45,000 after crediting this one on the profit on the disposal of certain machines. Closure will take place in July, but redundancy negotiations began with the staff in March. So let us go one by one. Okay, let us go through scheme 1. It is closure cost 125,000. It will be announced in June. Remember, your reporting date is 31st March, but authorized for issue 30th June. But it will commence in August. That means after the date of authorization. Okay. So scheme 1. The obligating event. What is obligating event? That is the announcement of the plan. Once you announce the plan, you are obliged to go for the restructuring, which occurs in June. This occurs in June. Why? because if you see, announcement is made in June, that's why. This is the year after, this is after the year end. Year end is 31st March, but it is happening in June. So there can be no provision if it's after the year end. However, the announcement in June should be disclosed. Remember, this should be disclosed. The announcement in June as a non-adjusting event after the reporting date. Why it is a non-adjusting event, it should be disclosed. Look at the date when it will commence. Sorry, closure will be announced in June, right? And your financial statements will be authorized for issue on 30th June. That's why. So it is from the reporting date till the date of authorization for issue, from 31st March to 30th June. You have announced. That's why it's a after reporting, so you don't adjust. It's a non-adjusting, but it needs to be disclosed. Okay. What about scheme 2? The cost will be amount to 45,000. 145,000 will be credited because of you have disposed certain machines. Closure will take place in July this time, and redundancy negotiations began with the staff in June. It already began in March. So it looks like provision has to be made for scheme 2. Although the closure will not begin until, even though the closure will not begin until July, what's the main fact is employees. They have a valid expectation that this would happen when the redundancy negotiations began in March. Definitely, when redundancy negotiations were going in March, it raises expectations for the employees that yes, restructuring is going to take place. It does not matter when it's going to close. Therefore, provision should be recognized, and the provision of 150,000. The provision will be for 150,000 because the expected profit on disposal cannot be netted off against the expected cost. Just check. 150,000. That means 45 plus that 105. 150. Why is it so? The provision will be for 150,000 because the expected profit on disposal cannot be netted off against the expected cost. You cannot net off the cost with this one. If you see, cost was 45,000, income was 105, right? The profit. You cannot do that. You cannot net off 105 with 45. So the provision will be the total amount. You need to add both. Now let us go to the delta. On 30th June 2002, directors of Delta decided to close down a division. This decision was announced to the employees. It was announced to the employees affected on 15th July 2002. After this, the actual closure occurred 31st October August. Prior to 2002, financial is being authorized for issue. So authorized before the authorization date. Expenses, and this has been given. You have been given the redundancy cost, staff training, operating losses, profit on sale of property, and this is estimated, this 22 million, but you have been given the actual redundancy cost is 20 million, and the actual operating loss for the 2 months to 31st August was 15 million. Okay, this is estimated, okay, here, but this is the actual. What is the amount of the restructuring provision to be recognized in the financial of Delta for the year end 31st July 2002? Please check the year end. Okay, this is about restructuring provision only, so you have to think about restructuring, not any other provision. The only item which can be included in the provision is the redundancy cost, measured at the actual amount of 20 million. Why? You cannot recognize provision on staff training. It is prohibited. Operating loss, prohibited. Profit on sale of property, prohibited. Only redundancy cost. Not that also, not this 22 million estimated, the actual 20 million. Okay. So that only you recognize as a provision. The IAS 37 prohibits the recognition of future operating loss or staff retraining and promise on the disposal of assets. It prohibits the other three. Okay, so you should know that the provision and what needs to be recognized. Don't go and recognize the whole amount. So that's it for provision IAS 37, and IAS 37 is not so hard as you think, guys. Okay, you just need to change your mindset and think that you can do it, and this is an easy section. You will be able to do it. Just make sure that you do lots of questions. Okay, so see you in the next standard. Till then, take care.